All right, if you're looking for the most up-to-date info on the market and what is going on right now in Wall Street, then you have come to the right place. You have found Riz International, and if you haven't done so, make sure you hit that subscribe button. Would really appreciate it. But tonight we are joined by the man himself, Rizwan Memon. Riz, how are you doing this evening?
Doing well, sir.
Awesome. Well, we are so glad that you are here. It is going to be quite a night because, man, everybody's talking about it, and it starts with an O, and it's Omicron. Everybody's talking about that, and I think that is kind of what's going on here in the market. Obviously, the market very choppy this week. You know, we go down, we come back up, we go back down. A lot of, it feels like a lot of indecision, a lot of, up and down, and anything but left and right. Riz, what's your take on this? What's going on with the markets?
Yeah, we've been in a choppy environment. We've been here before. Ups and downs, these wild swings from one day to the next. From a technical standpoint, you could see right there, it's right off of the 90 and the 50-day moving average that you have. The 200-day moving average is right around the 4,300 zone on the index. I have put it in elite on Friday, yesterday, I believe, and I said the 4,500 level, which we're just at that, 4,538 closed right above the 4,500 level. That is a key support, and it's obviously marked by that 90/100-day moving average zone. But another level that people should keep an eye on if we go lower, okay, this week, is the 4430 area. That's another level that again, none of this is set in stone. It doesn't need to be precise to the decimal point, but ultimately these are general areas we want to keep an eye on because they can act as sort of a floor, or as was technical from a technical standpoint, the support, right? And Chris, you have a bunch of lines there to kind of identify that, and people can either draw that on their chart or make note of it. But those are the key levels right now. From day to day, it's been volatile, but it's not hard to see that the index, the market is down from the highs, right? You could see it's kind of like a downtrend that's established, and I think Chris, with the ruler tab there, I think we are what I think 3% off the highs currently in the S&P 500, roughly. Yeah, about 4%, 4.25%. Okay, so not at that 5% drawdown yet, but I think if we do get to a 5% area, so that 4,500, 4,430 area, we will be past that 5% drop from the highs. That's when I want people to really start considering taking high probability and amazing companies to consider buying. Okay, again, this is not an advice. This is not financial advice. This is not me telling you what to do, but it is something that you want to consider. I always say you can't go wrong scaling into the solid companies that you like, companies that have the ability to grow revenues, profits, and survive and grow and are in the right industry. You cannot go wrong buying them. Like the index is down for, let's just say, 4.25% from the highs, but many of these stocks, especially tech stocks, they are down, 15%, even some of them 20% from their highs. So there are some great opportunities present. And I'm not saying go out and buy everything left, right, and center, but you have to be very specific and strategic with it. But you can go wrong buying great companies at good prices, right? And what I will do is I will share 2 to 3 names near the end of this video. So stick around to the end. But I will share those 3 names. Of course, the elite members know that the value buy list is coming. That's a very coveted, very highly sought after list because every time I release it, the names on that list and the people that, of course, that went out and bought some of the names that I suggest or talk about, they do really well if they have the patience. So yeah, I'm excited to release that this Monday. Elite members will get that live. But for those of you not in the elite membership watching this recording after the fact, I will at least share 2 to 3 names for you. But continuing on, yes, Omicron sounds like a transformer, to be honest. But either
Doesn't
way,
it?
I had the hardest time even remembering it and pronouncing it because I kept calling it different things. Started with an O. That's all I remember. But yeah, so I feel like right now we're in the early stages. Everything is speculation. So is it very serious? Is it something that the vaccines are going to be able to treat, or I would say counter? Is it something that we have to be considering the swear word, which is lockdowns? Which I hope not. We don't have to get to that point. But here's something, and I will give this. Uh, I don't think it has nothing to do with market, but I will say this outside of the market perspective from a virus standpoint. I'm not, and I will say this disclaimer here that I'm not a virologist. I'm not a scientist. I'm not a medical professional, and I'm also not an epidemiologist. But I will say that for those of you not in the know, that when we see these mutations, it's just what they call it, the Omicron variant or whatever, but I don't know why. But when we see these mutations, we have to look at a few things. Is it more transferable? Is it more deadly? Is it more serious? Is it clogging up the system? You know, these are the key questions that we need to ask. And let's assume, I'm not sure yet, no one is, but let's assume it's less deadly. Let's assume, even if it's more transferable, but it's less deadly, it's less serious, and it's not evading the vaccine. I can go on record and say that this would effectively, in my view, in my humble opinion, this would effectively mean that we are past the pandemic. Now, here's why. Now, I don't want you to rejoice or to celebrate too early, but here's why. The virus, the whole purpose of it is to survive. That's it. It has one purpose in life: to survive. Now, it has no purpose to pay mortgages or pay bills or look after its, kids and offspring. No, its only purpose is to survive and replicate, and in that case, mutate, right? So that it can keep on fighting the natural immune system from person to person to person. And if even after all this time, it is now getting to the point where it's, even if it's highly transferable, okay, I'm assuming, even if it's highly transferable, it's not as serious, then it effectively becomes like any other general known widely accepted virus, like the flu. I'm not saying it's the flu. Remember, I'm not saying it's the flu, but like the flu, it becomes something that we can control. It becomes something that we can work with, accept, right? So I know we're getting a bit off topic, but this is very, very important. And I'm speaking from this from a very, very, I would say, thoughtfulness. I want to say, I don't want to jump to conspiracy theories, or I don't want to put out a statement that is not vetted. And this is something that a lot of scientists will also be able to explain. Remember, I'm not a scientist, but they will be able to vet this statement, that if we can get past this to the point that this variant is effectively not as serious, I think this spells the end of the pandemic. Hopefully, fingers crossed. So something to think about. And we don't know yet. We don't know yet. The market is pricing in that this variant could be something that perhaps increases cases, is something that could potentially slow down economic growth. It's potentially something that could prove to be more serious than the Delta variant. It's pricing in that a little bit, not completely, but it's pricing in that a little bit. That's why you've seen this 4.25% drop from the highs. But on the flip side, if it isn't, my oh my, the index and the market as a whole has the ability to come back really strong. Okay. And even if we put the market to the side, as I was talking about for the last few minutes, this bodes well for us as human beings, as people, as a society, as a community, because we can finally, hopefully, put this behind us. So that's a little bit of, virus science-based stuff for you. Hopefully it helps. I will get to the questions afterwards. But yeah, from a technical standpoint, from a market standpoint, keep an eye on the 4,500 and 4,430 zone.
You see, the beautiful part of this is I actually am a scientist, and we can talk about the science stuff later, guys, in the Q&A, and I'll comment on what Riz said. Pretty much everything he said was correct. And so let's continue looking on here. But yeah, guys, remember, this is an opportunity. When the markets go down, that's when we need to be ready to strike, because we buy low and sell high. That's the moniker, right? We don't buy high and sell low. That's the opposite of what we want to do. So these pullbacks are necessary. They're necessary to give us good points of entry, so it's not anything to be freaking out about. It's a natural thing, and obviously we have a bit of a catalyst right now. And, for all of our people in Elite, you're going to have an awesome opportunity to capitalize on that. And let's continue here. Taking a look here, Riz mentioned tech getting hammered, and we definitely see this pull down here in tech over the last few weeks. Energy has also been coming down a little bit. Real estate, kind of hanging steady, hanging tough right now. Financials also coming down, and, healthcare and utilities are really kind of trading sideways at this point. Riz, you alluded to tech earlier. A lot of tech companies getting hammered right now. What is the story with that?
Yeah, we've seen this before, whether it's earlier in the year with inflation numbers, with bond yields. We've seen effectively the most high multiple industries come down. What's the most highest growth multiple? That's tech, because the whole growth sector is tech. Why? Because that's the sector that relies on and fits in the high growth area. It's essentially it's interchangeable. When you say high growth, you don't talk about regular pharmaceuticals. You don't talk about like stuff like Procter and Gamble or Johnson and Johnson. You think tech companies. So they're always growing theoretically, but growth comes at a cost, right? Growth comes at a cost. It comes at a risk. And when the market goes into a de-risk environment, it goes into a protection mode, it goes into a fear state of mind, then all these growth names take a bigger beating, a bigger hammering than the broader market. So it's not surprising that tech's pull back, but again, it's not just tech. I think we've seen everything pull back, like you said, besides real estate, and utilities move usually as a hedge or as a protection pocket in the index. So you can see the utility sector XLU is clawed up a little bit the last week, and then same thing with pharmaceuticals, XLV, which is not the greatest, but at least it's a little bit of an increase. So those two have kind of worked inverse to the broader market environment, and the only thing we can say with that is that it looked at more of as a protection, as a defensive area of the market, whereas with everything else, besides real estate as well, everything else is kind of pulled back lower from the highs. So that's my take on the different sectors. There are other sectors, but we picked these because we find that these are the more important, more prominent sectors in the index. But there are other sectors, right? We can't possibly fit all of them because all you're going to see is a bunch of lines, and you're not able to tell what the hell is what.
Yeah, I mean, the last thing we want is for the chart to be clogged up too much. We need to be able to see what we're looking at. But, that makes a lot of sense. When there's a lot of uncertainty, people go back to those safe haven, stocks, those blue chip stocks, those sectors that are really going to be solid, that they know that they can put their money into and that it's going to be okay long term. Whereas some of these growth stocks and growth securities are a little bit more volatile. And obviously when the market starts coming down, usually things that are more volatile oftentimes will go down with it. And so putting that money in that, that blue chip stock can really be a good hedge against any type of market volatility like what we're seeing right now. All right, now I know Riz is going to have something to say about this because I affectionately call Riz the oil tycoon. Oil taking an absolute beating over the last couple weeks once Omicron got announced, coming off the highs here at $85 a barrel and coming down here. Let's see, we closed at $66 a barrel. That is quite the rollover. Now, gold really not doing all that much. It's doing its gold stuff. But Riz, I'm sure you have something to say about oil here. So give us your thoughts on the black gold.
Yeah, very interesting. In fact, even on the last webinars I was on, I said, look, I don't know about 85. It's too rich. It's too frothy. It's not good for the environment. It's not good for consumers, and of course, not good for inflation. And this is good news. It just happened to be that Omicron kind of accelerated what I felt was going to happen, and it's been quite a big rollover. Like Chris pointed out, about a 20% drop. I think this is a good opportunity, and I mentioned it in Elite as well. I like oil at the 65 and below range, and just happened to be right around 66. So it's right in that equilibrium zone that I said. I like it. If we see Omicron be a sort of a dud, hopefully something that isn't too worrying, then I think oil can pick up, and I think it would be a good trade, around the 65 area or lower per barrel to go long. But I wouldn't carry it. If I did get in, I wouldn't carry it to like 85 or anything. I just get out at 70-ish area, because that's good enough for me. I'm not looking to get it back to the all-time highs, or not all-time highs, but like recent highs. That's I guess you could count that as a trade potentially, but either way, I think oil at this price point is great. It's very interesting. Let's see how it goes this week, but it's something that I am very, very interested in considering taking a trade on.
Absolutely. So all of our elite members, of course, will get alerted to that if that is something that we do decide to go ahead and take in Elite. Let's go ahead and take a look at crypto here. Crypto getting absolutely demolished over the last couple days. And actually, this is one of the questions that got sent to me through our Discord from one of our Elite members. Wanted to get your take, Riz, on this huge rollover in crypto over the last 2 weeks, especially the last 3 days in particular. What in the world is going on with Bitcoin?
Yeah. So there's a bunch of Bitcoin and crypto diehards that will say, crypto is a good hedge, and it's the correlation is inverse, meaning that if markets drop, crypto goes up. And I've always said there isn't enough data to confirm that, and it's actually confirmed now that no, crypto does not move inverse to the markets. No, it's not necessarily a good hedge. In fact, it's a risk-on asset class, just like the stock market. When you get into the stock market, it's a risk-on asset class. Same thing with crypto. It's a risk-on asset class, and it's moving in tandem with the broader market, just way more volatile as well. Look at that candle today for BTC, Chris. Just look at the friggin' tail on that thing. Absolutely insane. Went all the way down to like, what, 43? Like 42 or something? Like, fuck. I mean, it's crazy. It's volatile. You can't have crypto without it being volatile. I think it's part of the future of crypto. It's part of the reason people participate or trade or invest in it, because of that volatility. I just find it so friggin' absurd. I think it's, what is it, El Salvador, I think, Chris, that has their official currency as Bitcoin.
Yeah, I think that they did announce that.
Right. Imagine having the US dollar just lose 20%, 15% in a span of 2 days.
It's 28% from the highs.
It just, like, imagine having that. Like, see, this is what, it just blows my mind. You look like a genius, right? But I think the guy's name is, the president or prime minister's name is Naib or something. You look like a genius if this thing goes up 10, 15%. But imagine having your currency, so to speak, dropping 15, 20% in a matter of a few days. It just blows my mind. It's fucking ridiculous. But hey, they're playing a very nice experiment, and it's a small country. And I don't want to offend anyone, but really, it's a great experiment on the people and for the people of that country. So.
Yeah, we'll have to keep an eye on this. It should be very interesting. But yeah, wow, what a rollover.
Yeah, what a fucking rollover. I mean, I get a lot of questions today. Riz, did you buy this dip? No, I didn't. And it's okay. It's not really my game right now. I'm okay. If I see, I did this when crypto went to like 30K, and I'm like, if it goes to 30K, or it was like around 35 or something, I said, if it goes to 30, 32, I might consider buying, and I did. Well, I'll give another number here just for everyone interested. If it goes below, 42, if it goes below 40, then I'll consider a position. And I did that when crypto was 30K or 32K, and then I bought and I sold around 38 or something. And I got out. I'm like, yeah, that's it. That's fine. It was a quick turnaround trade. Not bad as a trader. But yeah, when I see opportunities, then I'll take it. Otherwise, I'm not going to just drink the Kool-Aid. I don't care if it's a stock, crypto, whatever. I'm not going to drink the Kool-Aid. I look at it from a risk and a profitability standpoint. But of course, it has to do with probabilities. That's what it's all about. So if it goes below 42, 40, yeah, you can probably expect an announcement from me that I have taken a position.
And I'd like to point out oh shoot, I'm still on my drawing tool. Hang on, here we go. To everybody who is calling the cup and handle pattern, yeah, how's that working out for you? Not
I
so
remember
well.
that. Yeah, I love how these patterns are seen as gospel. I hope people know better, but I'm sure there are a few that see it as gospel and not working out too well, like you said, Chris.
Because here it is,
But yeah,
guys.
very interesting. Very interesting indeed.
Everybody thought it was going to do this.
Yeah.
It did
And
not.
yeah, but it's forcing, it's potentially like we have in the comment here, it's doing another cup, and it's always another cup or another handle or another cup, it's just, but yeah, very interesting indeed. Let's keep an eye on it. But no, I do not have a position, not yet.
I don't know if I would call this a cup. I think it looks a little bit more like a wine glass. So, it'll kind of be like this. Here we go. There's your wine glass pattern. And you know what happens when you drink too much wine? You go down. So that's my official, pattern drawing right there. For all of my technical analysis buddies out there. I think some people like that one. All right, guys, let's take a look at some of the trades that we've taken recently here in Riz Elite and kind of discuss that. I know Riz said he had a couple that he wanted to go over at the end of the webinar, so we'll do that at the end. But let's take a look here. There are three that we had. ADSK. Autodesk. So this one got absolutely decimated on earnings. We had the rebound, but it really kind of looks like it's consolidating. What's your feeling on this, Riz? Is this consolidation, a good thing?
Yep, it's good. It's forming a base. It's holding, and even it's very volatile up and down. But this is, remember, it dropped before this week on earnings, and it's still holding even with the market dropping. So this is good news, and we're still in the position. It was slightly in the green, but I think it's in the red or near break even. So I continue to hold this. Not too worried. I think it's oversold off of last earnings.
Definitely, and quite the overreaction, if you ask me. And I'll admit, guys, I already knew what Riz was going to answer on that last question. This is one of the things, guys, when you see one of these huge drops like this, and it starts to consolidate, and it just holds and holds this level, that's a really good sign, because if it were going to continue down, we would see, higher and higher selling pressure coming in, and we're not seeing that. So, this consolidation here is very promising for this trade. It's not gospel, but it's something that we've noticed. And I think a lot of traders have noticed that, if you can hold these levels, like you said, if you can form a base, that's a really good thing. All right, next one, you want to talk about blue chip stocks. This is about as blue chip as you get. The good old Walmart, Wally World here, having a bit of a beat down here over the last couple of days, but nice rebound on Friday. I know we got in this one on, I believe it was Thursday, if memory serves correctly. Yep. I know I personally got in on this one, so I'm pretty happy right now. This is a beautiful bounce off technical support here.
Yeah, fantastic. Love it. I'm in this. We're in the green right now. I continue to carry. People get to see these live, right? So hopefully this is going to work out well. And I honestly can sleep easy at night. I have enough shit to worry about, so this helps me. Sleep easy. Dividends coming too, so that's a nice bonus. I continue to hold this right at the oversold level. These are the classic, great, phenomenal, cash flowing, sustainable, companies that you should have as part of your investment portfolio, or even a trading account. Like this is a trade. Like this is a great setup. Personally, right? And even if it goes below the 136 area that Chris has highlighted, I do not care. I might even buy more because you can't bet against America. And what's Walmart? Walmart is America. America is Walmart. Open for business, right? So, and this is one of the all-time great companies, great management. And I've said this since forever. And I said this is one of the best companies you can buy. And this is another buy opportunity. I'm a trader, so for me, I've gotten in, sold for profit, gotten in again, sold for profit, and here I am back in. So that's it a lot.
Yeah, and if that dreaded, L curse word happens again, you can bet your dollars that Walmart is going to be open. So, this has, a lot of potential, regardless of how things go with the virus. I think you have a very good entry here for all of our people at Elite who took this trade, and you should be very, very pleased at this point. Now, one that is a little more speculative, SPLK, Spelunk Inc., getting smashed here on earnings, but seems to be holding this area. We got in, looks like on Thursday again. Riz, what's your feeling here? This one seems to be, hanging around a little bit.
Yeah, this one is more of a knife catch, but you will notice that a lot of the drop happened before earnings. Now, this is not common, but it sold off before earnings, and earnings weren't too bad. It's lower based. I can't remember exactly, but I think it's lower due to kind of forward guidance not being the greatest. So you won't see that, right? Even though they beat on EPS and revs, they essentially forward guidance was essentially management saying, okay, well, maybe next quarter might be a little bit weaker than we previously anticipated. So that's why you see that big red candle on earnings day. And of course, the market environment currently isn't helping either. This is really one of the classical definition of a growth stock, growth tech stock. So it's not too in favor right now. But taking a look at where it is, previous historical support around May and in June, I think bodes well. This 110 level, we're still in the red a little bit, but hey, for now, I'm okay keeping this trade open. This isn't a Walmart per se. This isn't something you can just buy and carry and hold forever and just keep averaging down. This is not one of those, but it's still a great solid setup as a trade, right? So if this runs up and turns around, I think this can do really well, and we can also see that it moves big. It moves bigger than some of the more stable companies like Johnson and Johnson and Walmart and stuff like that. So this is more volatile stock and what we call a higher beta stock. So if this recovers, this can recover nicely.
Definitely, these growth stocks can definitely move, as you can see by the size of some of these candles, and can definitely be profitable for you. Beautiful bounce off this support level, by the way. We'll have to see if that holds going into Monday. But I want to go ahead and open it up to the chat here. If you have questions for us, want to go ahead, post those in the chat. Let us know what you guys want to talk about, and we'll make sure that we close with Riz's big ideas to share at the end of the
Chris,
video.
let's do the trade ideas first.
Okay, sure. Let's do it now while people type in the chat.
Yeah, I should have said we're going to do it before the questions.
Sure,
but,
no problem.
Yeah, let's quickly run those. I'm not going to take too long, but Facebook is one. Again, say whatever you want about the company. I'm not the biggest fan of it as a company standpoint in terms of what they do and kind of the fallbacks, but as a business, solely as a cash flowing revenue, business, they have no debts. This is a company that I think isn't going anywhere just yet, especially with the whole metaverse shift. But besides that, I don't think it's going anywhere. It's a large cap. It's a solid company. Has no debts, like I said. So it's here to weather any storm. I think this is a decent entry, not the best, but it's a good entry. Personally, especially below 300. Okay, so keep an eye on this one. I don't have a position yet, so I'm keeping an eye on it. It's a tech stock, so obviously kind of getting butchered alongside the tech route that we've seen. Another one is CRM. This one had earnings, and they had good earnings, but bad guidance, similar to Splunk, right? Like I mentioned before. This one is a phenomenal company, one of the better tech companies. Again, it's not going anywhere. I think this 250, 255 area is a good potential entry. I'm going to see what happens this week. The reason I really got really close to getting in on this one as well last week, but I held off because we took a few amount of trades already. I didn't want to overtrade. I didn't want to expose ourselves to too much positions, especially in this market environment. So I held off, but this is on my watch. The 250 zone is a very nice area to consider an entry. And last but not least, I'm going to share with you another great company. And this time it's a pharmaceutical, large cap, solid pharma, MRK, Merck. This is a company that you should know that I have traded many times before. It's a classic example of a sleep easy at night kind of company. And the closer it gets to 73, 72 area is the more interested I get in buying it. It had a tremendous rally, a massive tear on the news that they have a pill, a COVID pill that can, you know, decrease hospitalization rates and all that. So it had a massive rally, and I wasn't buying that. And I'm glad I didn't, because here we are, another great opportunity. In fact, don't quote me, but I think that COVID pill, um, obviously based on FDA approval and stuff, I think it's looking good. Don't quote me, but I think it's looking good. So obviously that bodes well for the company. So this is, I think, a great company, great stock. And even without the COVID stuff, you take off everything in regards to COVID from this company. They have a massive pipeline and an ongoing product, a tremendous amount of products that they have already that they offer. So even if you take out all the COVID pill related revenue and the news around that, it's still a great company. So this is a good level, I think. And if it continues to hold the 72, 73 area, that's going to be even better, because that tells us that it's potentially found a floor. And, even if it gets up to 76, 78, I'm okay getting out.
That's awesome, guys. Really great companies there to keep an eye on. Again, we don't have a position yet, but we are definitely looking at it. And these all should be stocks on your watch list. Whoever you are listening to this right now on YouTube, you should definitely be watching these stocks, because these are some premier blue chip stocks that really, really solid. And of course, here with Merck, you've got that dividend coming up on the 14th, which is always nice, a little extra cash in your pocket. Matthew wants us to take a look at his first love, and that would be Take-Two Interactive, TTWO. Okay, let's see here what's going on with Take-Two. Looks like we had a bit of a bounce here off of this this area here around like 160, but a lot of stuff cutting in the way. The 200's kind of coming down. Yeah, Riz, what are your thoughts on Take-Two? Do they have anything really cool coming in the pipeline?
No, I don't really like. I mean, it's a great company in terms of when they have something good coming out. They're still doing well with their revenue model around GTA 5 and monetization around GTA Online. Obviously, the last major release from them was Red Dead Redemption. But recently they launched the GTA remaster, the trilogy for I think it's GTA 3, Vice City, and San Andreas. You can tell I'm a video game buff, but it was fucking horrible. Like I don't bother with it. I don't really like going back and playing old games again, but that's just me. But it was horrible. They just a horrible fucking remaster. So not too stoked about that. Besides that, we haven't heard anything about GTA 6 or any other IP. So I would rather honestly buy EA. Rather buy EA, because I think this is another good setup. Didn't mention in the ideas because there's too many, but this is another good setup. So personally, that's my view.
Matthew says Battlefield suck though.
I know. And Matthew, I'll tell you right now, I was literally just listening before getting on. I was listening to the Battlefield 1 soundtrack. What a soundtrack, man! What a game! I still remember it, and I remember, and I'm not afraid to mention this live, but that soundtrack, I remember that game. It's been 5 years. I still listen to the soundtrack, and in fact, that was the only soundtrack of a video game. In fact, the campaign was actually amazing too. And we know these Battlefield games and their campaigns aren't the talking point, but that campaign was so authentic, so passionate, and it's one of the greatest Battlefield games for me of all time. Even though I like the modern shooters more, Battlefield 4, but Battlefield 1 is definitely one of the all-time greats. This one is I could do a whole video stream on the latest 2042, but I won't. But yes, that's just my 2 cents there. I'm going to keep an eye on EA. I think is a good candidate.
Fair enough. All right, Razin, is that LSPD or ISPD? I think it's L. It said he's
LSPD.
Okay, it says he's holding the bag with half position after the ER drop. I've extended my time frame on this trade. Any thoughts?
Let's see. Yes, extended your time frame. Yes, this is bad. I think what was it? I think I exited this some time back
Yeah.
for a loss because I just got fed up with it, and it's unfortunate to see that it's going lower for you. But this is not one of those companies that I would feel okay with carrying in this environment. Um, but of course, you know your portfolio, your risk tolerance better than I do. So I would honestly consider maybe, just eating the L on this one. That's something. Just from a risk management standpoint, because this is not looking good either. It sucks. Obviously, it sucks. Maybe there's a chance it recuperates, but going with that standpoint on a stock like this, it's very tough to justify. If it was something like Walmart or PayPal or I don't know, something else, it would be a different story. But for something that's a similar candidate to Shopify, very early stages, very much growth related, has no profits, yada yada, a bit tricky to justify.
That's a fair point. And, sometimes, guys, holding the bag indefinitely is not necessarily the right thing to do. Not only do you tie up your capital, but you potentially, just increase your loss more and more and more, and you lose out on opportunities elsewhere. And I think that's the big thing that some of us don't look at is like, what could I have utilized that capital for to have, potentially gotten some of that loss back? And I can say that personally. I had to take a hit on Corsair. I was holding that forever, it seemed like, and it just didn't work out. And I'm glad I let it go because, got a really nice trade after that and made up at least half the loss easily. Okay, Yas says he noticed that consumer staples, Costco, Walmart, Johnson & Johnson, Home Depot, etc., are recovering while tech stocks were getting demolished earlier in the morning on Friday. The sector is already at an all-time high. Would you consider getting in on any pullback?
Um, so the consumer staples. Now, if you look at Walmart, it's a great opportunity. But if you look at Costco, wow, this thing has been a massive tear, a phenomenal company. Would I consider taking a position on this yet? No. Similar story, I think, with Home Depot, right? I think some of these companies I find need to be at a bit of more of a discount for me to consider. Um, and personally, out of the four you mentioned, Costco, Walmart, Johnson and Johnson, and Home Depot, the two I like best are Walmart, as I already mentioned before, and Johnson and Johnson. Actually, not too bad of a company or price point on Johnson and Johnson at this level. So, like I said, I like buying when there's some, uh, I would say, favorability in the price point, right? Like, yeah, there's some people who will say, buy winners and cut losers, or buy things that are strong and avoid things that are weak. Sure, but I think at this level, from a mean reversion standpoint, I think Johnson and Johnson, Walmart are the better entries. But as far as consumer staples as a whole, well, that remains to be seen. I wouldn't go out and just buy an entire sector via an ETF personally.
Absolutely, guys. You don't want to necessarily overpay for something that's already extended. I mean, I'm sorry, you look at Home Depot, this is the textbook definition of being overextended. If you ask me, we're already approaching overbought territory, and it's just kind of consolidating here. I would not be looking to get in on this one. It wants us to take a look at Micron, considering a position. Well, guys, I told you about exiting Corsair and getting in on another one. Micron was it, and boy, did it make up a lot of cash. Now, Micron really running into some resistance here around this 87.25 area. Did not want to bust through it, and it's been really choppy ever since it made it up there. Riz, what's your take on Micron?
Yeah, great company. I personally would rather wait for a bigger pullback, especially with some of the kind of ways the semiconductor industry is in with kind of like the bottlenecks and supply shortages. Uh, I think the 80 area is a very nice valuation for it. Sure, it has more upside in the future, but right now I wouldn't personally consider getting it yet. I think it's a fair valuation for it. And if you can see, I think the all-time highs was like 96 or something. So not too much upside based on historical highs. So yeah, I would wait for this to pull back a little bit more. And if things like Nvidia and AMD, they're so frothy, obviously great, done fantastic. They're great companies and done really well for current holders. But as someone who doesn't have a position, I wouldn't even enter these because they're so overbought. And yeah, based on the RSI, AMD is not overbought, but um, from a point of looking at valuations, which I think are also important to a certain extent, I not yet for any of them.
I gotta agree with that. Just this rock solid resistance, if you ask me. Multiple attempts here and didn't want to bust through. I think we need to wait a little bit on this one. Okay, it says, got a question here. It says, I'm holding the brag with DraftKings. Man, you got to let your bad bets go sometimes. Is it a good idea to dump it at this level, or is there a chance for a rebound? Well, I'd say there's always a chance, but ooh, this ain't looking so good.
Yeah, fuck. This has been demolished even more so. Again, looks really bad. It all comes down to, for this kind of company, it all comes down to your thesis around betting and gambling sector and the industry as a whole. Because if you are bullish on that sector and that industry, well, this is one of the better companies, and I would say one of the most viable companies. I know there's Penn and all that stuff, but I think this is one of the more viable companies to buy if you're bullish on that sector. If you're not bullish on that sector and you're in this trade from a technical standpoint, yeah, this is a long time. This is a goner, right? So depending on where your break even is, it could be a tough climb. It could be a tough climb. So I can't tell you what to do, but maybe wait and see, because the reason I say that for this is because you want to know that, is this going to have a higher ability to, let's say, go up once the market finds its footing. Right now, it's getting sold, and it was getting sold before market drop, but it's accelerated that drop because of the market. So last thing you want to do is kind of not give it enough of a chance. I don't know when you entered, right? So I'm kind of working with a limited amount of information, but you want to give it a chance, but don't perpetually just hold the bag and think, oh, I'm already losing this much money, so might as well hold. I think that's a recipe for disaster, especially on a company that is, let's say, more of a speculative company, growth company, yada yada. So my thoughts around that are, give it till this week maybe, and then you should know what to do.
Absolutely. All right. Matthew says he got assigned on LMND in a short put and have carried through the drawdown. We're dipping below the last support area, and I'm deciding whether or not to cut it loose. All right. Here we go.
Yeah. So Matt, for this one, since you can do options and you got assigned, so I would say do covered calls on this at your kind of break even. I'm not exactly sure what. I think was it at 60 or something that you got assigned at, or 65 or something. But maybe you wanna consider covered calls. See what the premium is like on that. If it 68, okay, all right. Not ideal. So maybe there isn't much premiums there at that strike at all. So I mean, honestly, I would consider just getting out. Maybe do something like a 46, something like that, kind of covered call on it. And then if it gets there, it gets there. If it doesn't, then offshore, like, just get it off. Like, I wouldn't feel comfortable carrying it if it goes any lower than 44, personally.
Absolutely. And wanted to touch base while a couple of other people are typing in their questions, talking about mutations. Someone asked, what happens if Omicron mutates? The natural tendency for viruses, guys, especially ones, respiratory viruses, things like this, like the flu, like, COVID-19, is to mutate down, meaning they spread more and they're less deadly, just because of what Riz was talking about. It does them no good to kill the host, because their entire purpose is to perpetuate their species, which is, of course, the virus. The virus can't do that in a corpse. So you see this all the time in history. The most classic example is the Spanish flu outbreak. How many people here know somebody that died of Spanish flu? I don't know any. I don't know anybody in my lifetime that has died from the Spanish flu, because it has mutated down. And that is a normal, natural occurring thing. It typically happens. Again, I'm not a virologist, but I do have my bachelor's in biochemistry, and I spent over 10 years in pharma, so I know one or two things. And I definitely think that, guys, I have to agree with Riz that if this turns out to be a lesser, version of the virus, then I think things are looking very good, if you ask me.
Perfect. Yes. Thanks for confirming that.
Of course.
Chris. But yes. So yeah, those are our takes around the virus. Again, still early days in terms of Omicron, nanobots, Omicron, Transformers, Autobots.
More than meets the eye.
Yeah, everyone. Yeah. So either way, we'll keep an eye on it. But let's take it day by day. I think Monday is going to be very interesting. I hope to have that value buy list for our elite members out, and let's see how it goes.
Absolutely. Riz, thank you so much for coming out tonight for webinar. I really appreciate it. As always, all of your insights and your depth and breadth of analysis. It's so valuable. And thank you, of course, to all of our elite members who are here live and everybody watching the replay on YouTube. Thank you so much for checking us out. And if you're not subscribed to the channel, make sure you click that subscribe button. Thank you again, everybody, and we will catch you on the next one.